Hi, I'm Kata Gruneberg, CPA and Masters of Accountancy graduate of the University of Wisconsin-Madison. I'd like to welcome you to the SBDC Entrepreneurial How-To video series. Today, I'm going to give you an overview of what a balance sheet statement is and how you can use it to make business decisions. The balance sheet is a snapshot of a business's worth at a particular point in time and is often reviewed monthly, quarterly, or annually. The layout of this document follows the basic accounting equation. Assets equals liability plus equity. Let's take a look at the balance sheet in more detail. Assets are what the business owns. This includes items like cash on hand, accounts receivable, and inventory. These assets are referred to as current assets. There are also long-term or fixed assets, such as buildings, large equipment, and automobiles. Fixed assets lose value over time and are depreciated. Liabilities are what the business owes. These include current liabilities, such as the accounts payable that you owe to vendors, while long-term liabilities are items like business loans from the bank. Equity is defined as the money that has been invested into the business, either from an owner or a shareholder, in exchange for some form of ownership, most typically stock in the business. It also includes the business's profit or loss over time that has been reinvested or retained in the funding of the business. As you can probably guess, the balance sheet should be in balance, meaning that the assets of the business must equal the liabilities plus owner's equity. If it is not in balance, that means the statement has not been prepared correctly. It is important to enter data into your balance sheet in a timely manner. The balance sheet communicates what the business owns and how they have funded its assets at any given point in time. Internally, it allows the business owner to see how much cash they have on hand or the current value of their inventory. You can also use the balance sheet to determine how much debt you have and understand your ability to repay it. Externally, it is used by investors and creditors, such as banks, to determine the financial position of a company. They can see how debts were financed, how much liquidity or cash the company has, and how profitable it has been over time. The balance sheet is reviewed with the profit and loss statement and cash flow statement to fully understand the financial picture of the business. To gain confidence in your ability to effectively manage your business's financial position, you may want to take a class on financial management or seek help from an accounting professional. Now that you know what a balance sheet is and how it can help you manage your business, check out the rest of the SBDC Entrepreneurial How-To video series to help you build your business.